Hi class. I thought I would do a video today just to kind of hit the highlights of the homework for Chapter 3. So Chapter 3 has to do with T accounts, and I know those are a little bit challenging. So I'm actually in our homework for Chapter 3, and this is number 4. It says, the following T accounts show transactions that were recorded by residential relocators, a firm that specializes in local housing rentals. So you'll see that there are account names, and the T accounts are below them, and they're T accounts because they look like a T. So here's cash. We've got some amounts on the left and some amounts on the right. And we have several other accounts. And then it says prepare a trial balance and an income statement for residential locators. The trial balance is for December 31st. Income statement is for the month ended December 31st. So down here we've got our trial balance in the first tab and then our income statement in the second tab. Now I'm not going to work all the way through these, but I did want to just look briefly at a T account. So let's look at the cash T account. So cash is an asset. And so if you remember, the normal account balance for an asset is a debit balance. So when we look at T accounts, there is a debit side and a credit side to each T account. And remember, debit and credit has to do with the location of an amount. So in our T accounts, over here on cash, the left is always the debit side, the right is always the credit side. And it doesn't matter which of these accounts we talk about. The left is always the debit, the right is always the credit. So in cash, which has the most transactions in it, we have a debit of $178,000, one of $18,000, and one of $1,800. And then we have four credits, $34,580, $9,800, and $3,800. So the first thing you need to do in this problem is to find the balance of each of the T accounts, because we're going to have to put those down here in the trial balance. So when you do the trial balance, you're going to put each of the accounts and then the balance in the T account. So let's start with cash. Now to find the balance in a T account, I think the easiest way to explain this is to add both sides up and then take the difference, and the difference or the balance goes on the big side. So if we look at that cash account and we add all the debits, it looks like the debit side or the left side is $197,800. So that's the balance on the left. On the right, if we add the $34,000, the $580, $9,800, and the $3,800, whoops, looks like it's $48,180. All right, so on the right we have $197,800 on the on the left, which is the debit side, we have $197,800. On the right, which is the credit side, we have $48,180. So we're going to take the difference between those two totals, and the difference is $149,620 if I did my math right. And the balance goes on the big side. So we look at the balance over here versus the balance over here. You can eyeball it and tell that the left side's bigger. So that balance is going to go over there. If you're not sure, you might just have to write it down. But the balance goes on the big side. So that's a debit balance of $149,620. Let's just see if I did my math right. So I don't trust myself. I get happy fingers sometimes on the calculator. So it should look like that. In the rest of these, if you have an account like equipment that only has one entry, then that amount is the balance actually. So equipment has a debit balance of $68,000, or a debit transaction of $68,000. Nothing else happened to it. So if you were to balance that at the bottom, it'd still be a debit of $68,000. Let's look at fees income. There has nothing in the debit side, only in the credit side. So in that case, the balance would be the total of the things on the credit side. So as you find the balance of each of those T accounts, you're going to list your balances through here. And then you're going to do an income statement. Now the income statement, you can get this information off of the trial balance. And of course mine's not done, but if you were to have it done, you could get these balances off of the trial balance. The trick is to know what goes on an income statement. So if you recall in the reading, the income statement includes your revenues, or that's your income, less your expenses. So if you look at these T accounts, cash, equipment, accounts receivable, all these at the top, and that supplies right here, those four are asset accounts. That's something the company owns. Accounts payable is a debt. They're going to have to pay that in the future, so that's a liability. This is a capital account, Wade Wilson Capital, and it's pretty easy because it says it's capital. Wade Wilson Drawing is also part of that capital account, so these two kind of go together. So it looks like you have one income, which would go in the revenue section of the balance sheet, and an expense here and an expense there, and that's all I see. So fees, income, and two expenses are what's going to go on your income statement. So that, if you fill those in, you shouldn't have any trouble with number 4. Let's look at number 5. It says the following T accounts show transactions that were recorded by residential relocators. And it says prepare a statement of owner's equity and a balance sheet for residential relocators as of December 31st, 2019. Now I wanted to go through this one because it's a little bit tricky, because down here you have 2 tasks. You have to do the statement of owner's equity and the balance sheet. But if you were reading the textbook and you recall, there is a specific order that you have to do financial statements, and that order is that you start with the income statement, then the statement of owner's equity, and then the balance sheet. And you have to do that because on the statement of owner's equity, you have to include the net income or net loss. And the way the place we get that net income or net loss is from the income statement. But there is no income statement tab here, so that is a little bit tricky. So we're going to have to kind of, you can do it on a scratch sheet of paper or just in your head, however you want to do it. But we need to find out what the net income is as if we were doing the income statement. So we need to look at all these things and figure out what would be on the income statement. So this looks a lot like number 4. Cash, equipment, accounts receivable, and supplies are all assets. Assets do not go on an income statement. Accounts payable is a liability which doesn't go on an income statement. And here's these 2 capital accounts, Wade Wilson Capital and Wade Wilson Drawing. Those are not income or expenses, so they do not go on the income statement. So we're left with these 3, fees, income, telephone expense, and salary expense. So those items would actually go on an income statement if we had one. And since we don't have one, we're going to kind of have to scratch it out on a piece of paper or do it in our head. I'm going to do mine on the calculator. So if we were to do an income statement, we would start with fees income, which is the money we made. So we would add the $16,000 and the $10,800 together, and that would be our total income. And for my problem, and your numbers will be a little bit different, but mine is $26,800. So that would be our total income, and from that income we would pay our expenses. So we're going to take the $26,800 in income and subtract out the $560 of telephone expense and the $9,600 of salaries expense, which gives us a net income of $16,640. Now I'm going to tuck that away for just a minute. We're going to look down here at our statement of owner's equity. So in our statement of owner's equity, we're going to start with the owner's equity at the beginning of the month or the beginning of the period. If this was for a year, we would start with the beginning of the year, but we're just doing a month. And we're going to show in this statement everything that happens to Wade Wilson's capital for the month to show how we end up with the ending capital balance. So we're going to start with the beginning amount, and then we're going to show what changed that amount and come up with a new balance. So to get our beginning capital, it doesn't tell us that this is the beginning, but there's nothing else there about capital, so we're going to assume that the $176,000 is our beginning capital, so we're going to put that in there, and it's going to total it for us automatically. So one of the things that affects capital is net income or net loss. Now, this is Wade Wilson owns this company, so if the company does good, yay for him. It increases his value in the company. If the company does bad, stinks to be him, it's going to decrease that value. Well, this company did good. They actually had a net income, which we just calculated, took our income less our expenses. It was $16,640. In my problem, again, yours might be different. So that increases the value of his capital. So you see it went from $176,000 to $192,640. The other thing that will affect his capital is money that he took out of the business, and those are withdrawals. So it actually says that he had taken out $3,600 out of his company, and he can do that. It's his company. He can take the money out. So we're going to, whoops, that should not be add. Clicked the wrong thing. It should be subtract, because that's going to lower the value of what he owns in this company. So you'll see that brought this balance down a little bit. And then there's a title right here. It's going to be either an increase or a decrease in capital, and that's just the total of these two things. So those two kind of net out to $13,040, and that's an overall increase because net income was bigger than withdrawals. So that is your capital for the end of the month. So then when you get ready to do the balance sheet, we have three areas in the balance sheet: assets, liabilities, and equity. And if you recall, the total of assets has to be equal to the total of liabilities plus owner's equity. So you can kind of think of it when we were back in chapter 2 when we were doing that accounting equation and there was little equals. You can kind of think of an equals between these two sides. So we're going to try to balance the left side with the right side. So let's look at our instructions. We've got all of these T accounts, and it says on the balance sheet we have a section with assets, and we have 4 assets: cash, equipment, accounts receivable, and supplies. So I'm going to put those in here. And sadly we have to do some math. And we're going to have to figure out the balance in our T account. So again, add both sides together, take the difference, and that's your balance. The balance goes on the big side. So I'm doing cash. So I'm going to add the left side, add the right side, and then take the difference between those two. And it looks like my cash balance is $147,840. It should go on the big side, which is the left. Down here, there's really not a side. It's just a column. So, all right, equipment, $66,000. Accounts receivable. Oh, we've got 2 amounts, so we're going to take the difference between those. $9,200 is that balance. And supplies, $32,000. And liabilities, we had just the one, which was accounts payable, and it was $66,000. And then owner's equity, that would be Wade Wilson Capital. All right, so for the balance sheet, that's the tricky part. You got to jump back over, and this is where the balance sheet ties to the statement of owner's equity. So we need this balance at the bottom of the statement of owner's equity to put over on the balance sheet. And before I check my work, we should be able to look at this and be pretty confident that it's correct, because we've got $255,040 on the left, $255,040 on the right. If we check my work, it should look something like that. So that's the way yours should look, although with different amounts. And this is our statement of owner's equity. So that's number 5. Number 6 is just a set of T accounts. I'm not going to work through this entire thing, but it's a little bit different than some of the other T accounts, so I did want to maybe do 1 or 2 of these. It says Guttery invested $141,000 in cash to start the business. So to do this, you have to decide which accounts are affected, and that would be cash and Randy Guttery Capital. So cash is going up. Cash is an asset, and so to go up, it gets debited, and they want you to put the little letter there to kind of tag which transaction it is. Now, if you have a debit, you always have to have a credit. They have to be balanced. So here's our debit. Our credit goes down here in Randy Guttery Capital. It's the same amount, and it also needs that letter A so that it matches up. So you have to have at least 2, you have to put in at least 2 things for each of these transactions, because one of them has to be a debit, one of them has to be a credit. All right, let's do B, paid $4,100 for the current month's rent. That means they paid cash, which would be one of the accounts, and they probably got a rent expense down here somewhere. There it is. All right, rent expense, this is B. An expense has a credit balance, so we're going to credit it to make it go up. So this is an increase in that expense for the month or the year, whatever. And then cash is actually going to go down because we're paying out cash. Now this is the thing I wanted to show you. Normally what we would do would be this, and you would probably have noticed this in the previous T accounts that we looked at and the ones that you'll be doing in the homework. This one's a little bit different because there's a debit side and a credit side, but they want you to show them that you understand that one side is an increase and one side is a decrease. And so up here it says T accounts normally do not have a minus sign, but use minus signs in this problem. So they want you to use a minus sign anytime an account decreases. So you paid out cash, that means cash is decreasing, so they want a minus sign there. So it may not, let's just see if it'll count it wrong without that minus sign. It may count it right either way. Nope, it's going to count it wrong. So make sure that you put the minus signs in anytime something's going down. So that means that in cash, anytime there's a credit, there should be a minus sign. The same would go for accounts receivable, office equipment, office furniture, because those are all assets. So anything on the right-hand side of that T account is going to be a minus sign. Accounts payable, liabilities, work the opposite way. So a minus on an accounts payable would be on the left-hand side. Capital shouldn't go down, but if it were, there would be a minus on the left-hand side. Drawing, the minus would be on the right. Fees, income, minus would be on the left. And then all of your expenses, if they were to decrease, which they shouldn't, but if they did, the decrease would be on the right. So I just wanted to show you that quickly with number 6. So let's look at number 7. And this one, well, I'm not going to go all the way through it either, but it's another one of those where it kind of skips a step, and you might not know how to tackle this or how to get started. So I thought I would look at it. So one of the things I wanted to mention before I look at number 7 is in Blackboard, under the syllabus in our course, there's a file that's labeled Accounting Basics, and it's just kind of like a cheat sheet that I made with some beginning, very basic accounting things. Now you can find all of this in your textbook. But if you're struggling to figure out whether an asset goes up on the right or the left, whether an expense goes up on the right or left, or what kind of account is accounts payable? Is it an asset, a liability, an equity? If you can't remember those things, you might consider printing this sheet off. I've got a little diagram here and a mnemonic to help you remember. So absolutely every dog loves running crazily. Absolutely, A for assets, every is E for expenses, and dog is D for dividends or withdrawals. And it depends on what kind of business it is, whether they use dividends or withdrawals, but those are basically, they work the same. And then loves running crazily be on the right. So this is actually a big T account. Everything over here, which will be your assets, expenses, and withdrawals, they go up on the debit side and down on the credit side. The opposite would be true for everything over here. So liabilities, revenue, and capital go down if you debit them and up if you credit. So that might help you to remember. And then here's some basic or some common examples of each type of account. There's a summary of the financial statements. So this is just real basic information that may help. So having said that, let me get rid of that. I'm also going to put in this announcement, or along with this video, T account template. And I'm going to do that because you might want to use it for number 7. So let's jump back over here and look at number 7. So we've got all these, it says we've got Randy Guttery, he's going to do his financial statements. He's got all these transactions. And then it says the requirements are to prepare a trial balance and then all the financial statements. So to do that, you can't do the trial balance unless you know the balances of each account, and you don't know the balances of each account until you record these transactions. And if you go down here, there is nowhere to record those transactions. So this is where the Excel spreadsheet comes in. So Guttery invested $144,000 in cash to start the business. You can use this if you want to. In that transaction, we know it affects cash and Guttery, and Guttery's capital. So I would probably myself prefer to just scratch this out on a sheet of paper. You can just draw T accounts and do this. But if you want to do it this way, you can. Doesn't really matter. You don't have to turn this in. This is just for you to work. So it says he invested $144,000. So there's my debit. There's my credit. Let me fix the format on that so we can read it easier. All right, so your work's going to look something like this. Paid $4,400 for the current month's rent. Whoops, I don't need to scroll down. I need to jump over here. So I've got a rent expense, and I already forgot how much it was. Let's see, $4,400. So rent expense is going to go up. That's a debit when expense goes up, and cash is going to go down, something like that. Bought office furniture for $15,120 in cash. So we need to add an account. And we paid cash of $15,120. So cash is going to go down. Office furniture is an asset. It goes up. And if you'll notice, I have several T accounts. You might not need them all. I just made several of them so that you could do that. So when you get ready to total those, you're going to add both sides, take the difference. So right now, it looks like my cash is $144,000, and then subtract out those credits. So right now my cash is $124,480. Capital's $144,000, rent's $4,400. Office furniture is $15,120. So you're going to go through this process and just make a T account every time you need one until you get through all of these transactions. Once you get that done, you'll be ready to do your trial balance. And to do your trial balance, you're going to list your accounts and just put in the balance. So whatever your cash account balance is, you're going to put it over here, and it should be a debit. Now with the trial balance, you should put those accounts in order. And when we list accounts in accounting, almost always we list them as assets first, then liabilities, then equity, and then revenue and expenses. So I don't think this will count it wrong if you don't put them exactly in that, kind of group them that way. But it's just easier when you get ready to do the income statement if you do that, because all your revenue and expenses will be at the bottom. When you do your balance sheet, all of your assets, liabilities, and equity should be grouped together at the top. So it just makes it easier to work off of. So that's just a little tip. So you're going to do your trial balance. Your balances at the bottom should be balanced. If they're not, whichever ones are wrong, you'll have to go back to your T accounts and look at those particular ones, see what transactions you may have missed. If you get stuck on any of this, please let me know. You can always send me an email. That's the best way to get a hold of me, and I can look at your work and see what's giving you trouble. So that's kind of a summary of what you're going to need to do for Chapter 3. As always, I'm available for assistance anytime you need help. Have a good week.